Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada. The Bank of Canada will announce a rate decision tomorrow at 10 a.m. with expectations still at unchanged at 4.5%. However, stronger GDP, higher CPI data, along with pretty decent labor market employment data has the markets thinking that, well, if they're going to do something, they're going to do 25 basis points hike. So there is a 43% chance of a 25 basis point hike, even though most of the economists surveyed through Reuters say that there is no change. So, flip a coin, it seems like, for the rate decision tomorrow, and that's going to have an impact on the currency, of course. The bias, taking a look at the daily chart here from a technical perspective, is more to the upside for the Canadian dollar, downside for the dollar versus Canada. But recall from the weekend video that the prices had been largely contained into a red box here, where there were lots of ups and downs over the last, going back 1, 2, 3, 4, 5, 6, 7 or so trading months. There was a move to the upside here early on, which failed, and then we had established resistance here, and most of the support has come ahead of these lows right through here. So with most recent lows in the month of April and May coming around the 0.3298 level, let's call it, or 1.3298, let's call it 1.33 on the downside. So now in between sits the 100 and 200 day moving averages, which are near converged near the 135.16 area, and the current price trend 13413. So as mentioned, the bias remains more to the downside for the dollar versus Canada, to the upside for the Canadian dollar below the 100 and 200 day moving averages, and that's going to be our key barometer. On the top side, that if they come in more dovish and the price moves back above the 1.35166 level, that would be more bullish for this pair. On the downside, however, the bias would, or the target on the downside would look toward that 1.33 level, which is all these lows through here, where the price, especially here and here, where the price stalled between the 132.9998 level and the 133.203. So on the daily chart, though, that would be the target to get to and through. If we're able to get below this, the below of the red box, then we start to look toward our low prices through here, which, by the way, the low price, late prices back here stalled against the high prices back here. So this was the ceiling before the market broke higher, and then it became the floor right here, and we had earlier buyers here and here. So getting below this level at 13207, a full 100 basis points lower than that, would be the next target. So the daily chart kind of shows a lot of what's going on from a technical perspective in the big picture environment, and that big picture shows consolidation with a bias more to the upside for the Canadian dollar, to the downside for the dollar versus Canada, but we need to get below and stay below the 133 level. Now let's drill down to the hourly chart just to see where key levels are in relation to the 100-day moving average. And here are the 100 and 200-day moving averages up here. They're overlaid on this hourly chart, and you can see that in trading last week, the price fell sharply to the downside through those levels, and we've been consolidating near the lows. Now, of concern or a clue that we might look at going forward and through that the rate decision tomorrow would be the falling 100-hour moving average. That moving average is going to be moving down over time, and so it's going to be much lower at the time of the rate decision tomorrow. And so there is going to be some pressure if the market continues to consolidate, with that moving average kind of catching up with the price. So we'll be paying attention to that. If the price is able to get above the 100-hour moving average, that would tilt the bias a little more to the upside, but really it's going to be these 100 and 200-day moving averages that are going to be in play, and perhaps maybe above that, the falling 200-hour moving average, which is moving toward that 100-day moving average, 200-day moving average. So we'll be watching that as well on the top side. On the downside, the upside, or the pair is currently testing a modest swing area through here. If we get if we get back below that level and stay below that level, we'll look toward the lows from the month of May. So there you have it, kind of a detailed look at the dollar versus Canada as we think about the rate decision tomorrow. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.